Hello, this is the TradeSite US Stocks, Futures, and Forex market preview for the remainder of the week, June 9th, 10th, and 11th, 2021. That's Wednesday, Thursday, and Friday. Just got back from a trip. Let's go through the Forex stuff, then the futures and stock market stuff, then we'll look at the economic calendar for the rest of the week, focusing on the one big thing that's coming up. We'll talk about that in a moment. All right, so here's the dollar index daily chart, and as you can see, we've really done nothing for the last few weeks. Forex feels like it's slowed down. For the summer doldrums, we haven't gone to half size yet, which is something we usually do in late June, early July, but it's definitely been a little bit lighter than we've seen lately. Here's the look at the euro-dollar index. Here's a look at the pound-dollar. Totally flat. Totally flat. Look how narrow that is for weeks now. Aussie dollar also very flat and still sitting where it was back in January. Euro-yen, not much this last week. Pound yen, also very flat. So nothing very exciting to look at on the Forex side. Here's the intra week. Now let's go back and look at last week, which is what we usually do. Since we were recording this a little late. So you can see the high to low last week was about 140 pips on the euro dollar. On the 30-minute candles, the 13 seeker sell signal was the high of the week, which is about right. And there is that. We've been pretty narrow here so far this week. All right, in terms of the pound dollar, again, we'll slide this back so we can see last week. High to low for the week there was about 160 pips, so not much better. We did have a dip down on Thursday and a dip back up on Friday. So it is what it is. All right, in terms of the stock market side, here's the ES front month futures contract. This is the daily chart of the broad market futures forum. Still operating under a 13 seeker sell signal on the daily from about 2 weeks ago, a little over 2 weeks ago. The risk line is the pink line of that, so you can go all the way up there and that signal is still in place. Target would be typically the red static trend line down below at about 38.50. So we'll see where we ever get on that. In terms of the major daily charts, let's go. Crude oil was up 80 cents today. New highs for the year at 70.03 as we enter summer. Gold down $3.60. The S&P cash gains 74 cents, hanging near the highs. Also has a 13 sell signal on it. NASDAQ 100 up $7.97. SOX down 20.43. Biotech's down 4.63. The Russell 2000 up 24.58, looking like it might break out, but right against that green static trend line here. We'll see what that means. Remember, there's a 13 sell signal back in March at the highs, and then we are operating under a 13 buy signal here on the Russell 2000 technically currently. The VIX up 65 cents to 1707. It almost hit 15 today, which would be a new low for the last year since COVID. Trend closes at 1.34. Puts the 10-day at 1.07, so that's not a signal. NASDAQ volume was back up. Big day volume-wise. 5.8 billion shares. Biggest volume we've seen in a month. Which is funny because last Friday should have been the volume on the options expiration. Advanced decline ratio on the NASDAQ plus 929. On the New York plus 870. Google loses $3.86. Just off the highs. Apple up 84 cents. Netflix down $2.27. Amazon up $66.10. Tesla down $1.54. Facebook down $2.90. Zoom down $1.40. Goldman Sachs down $3.46. TLT, the 20-year bond ETF, up 98 cents. The Dow down 30 points. Bitcoin plunged down to 33,580. It was even lower intraday, almost back down. That 30,000 level, if that cracks, is going to be a problem. All right, intraday or intra-week, this is the 10-minute candles. Now, again, we're 2 days into the week because we finished Tuesday. Here was last week. Let's go look at that. And we had that Memorial Day holiday. So you can see the prior Friday on the far left, then the Memorial Day little junk, then the gap up Tuesday sold off, flat opening Wednesday, flat close, gap down Thursday, came back up. So at this point, you're basically sitting nowhere. On Friday, you gap up and close near the highs of the week, but it's really only up about 18 points for the whole week. And then this week so far, let's flip it over to 5-minute candles just so we can see. You can see the action here so far. Nothing for the week. Flat opening on Monday, hooked down, came back up a bit. Gap up Tuesday, there were some issues, filled the gap. sold off lower on some issues with the more of the cyber ransom junk. It came back up, and so now we've closed basically right where we were on Friday. So that is not interesting in the least. All right, let's talk about the economic data here, and we already had some minor stuff this week. Let's just skip ahead to where we're at because we had the trade balance this morning here in the U.S. So in terms of tomorrow, Wednesday, or tonight, we've got CPI and PPI out of China, German trade balance out of Europe, preliminary machine tool orders out of Japan, German 30-year bond auction. We've got a rate announcement out of Canada, the Bank of Canada, at 10 a.m. Eastern Time tomorrow. Final wholesale inventories, crude oil inventories, 10-year bond auction, RICS house price balance, PPI out of Japan, MI inflation expectations out of Australia, French final private payrolls out of Europe, French industrial production, Italian industrial production out of Europe. The European Bank, ECB, has their rate announcement 7:45 a.m. Eastern Time on Thursday, along with their press conference. CPI here in the U.S. at 8:30 a.m., so we'll be half size ahead of that in Forex. And again, with the rate announcement out of Europe too, that's a combination there. The weekly initial and continuing jobless claims numbers, natty gas at 10:30, 30-year bond auction at 1, federal budget balance at 2, Japan BSI manufacturing index, and then on Friday, German WPI construction output and GDP and goods trade balance, index of services, industrial production and manufacturing production. That's all out of UK at 2 a.m. Eastern Time. New loans and money supply out of China, the G7 meetings, pick up capacity utilization rate out of Canada, and then preliminary University of Michigan consumer sentiment here in the U.S. So that is what is left for the week. Now, here's the biggest thing to note about what's left for the week, really, which is that we are at the once a quarter quarterly futures contract roll. So Thursday, right now we're trading the M, the June contracts. Thursday, we're already going to shift, can you believe it, already halfway through the year almost, to the U's, which is the September contracts. And anyway, so that means that Friday, the volume will shift out of the U's on Thursday. Friday, the volume will pick up in the, out of the M's, sorry, on Friday, the contract will be, volume will pick up in the U's, and usually it's a very non-technical day. The big traders stay out of it because you don't have full trading volume in that contract until Friday, which means you have nothing to work off of Thursday's information. So it's usually a bust of a trading day on Friday, and it can even be slow on Thursday, and we're already seeing a slow week. So with 3 days left, that's what we have to focus on. We won't do another market preview this week, and we'll get back to some of the other stuff. We've had a couple green trades so far this week, 2 green days, so we can't complain, but we're gonna keep it light for sure. Hopefully Wednesday gives us some action. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading rest of the week.